Okay, we're going to do a brief video on Forex day trading strategy, and we're going to take a look at this just for example purposes only. We're going to take a look at the US dollar versus the Japanese yen. This is the cash market, not the futures, and we've got three moving averages on here. We've got a 5-day in green, a 20-day moving average in red, and a 200-day moving average in blue, and we're on a 1-minute chart. We can jump around real quick. Let's just give you a better idea what's going on. So this is an hour chart for the US dollar against the Japanese yen, and we're going to go over some day trading stuff here real quick. Hour charts are fantastic charts to build trading systems off of, and you can take and get a tremendous amount of value out of a 1-hour chart. I have not gotten much out of 5 and 30-minute charts. You can use them. The 5-minute you can use for refining your entries and exits, but to build trading systems, I generally look at the 1-hour chart for intraday trading, the 1-hour chart, and then let's go back to the 1-minute chart. The 1-minute chart is ridiculously interesting if you have a very high volume instrument that you're trading. For instance, S&P 500, some of the currencies. This US dollar versus Japanese yen is usually a good one. The Aussie versus the yen is another good currency to day trade. But let's take a look at this chart and see what's going on. Now again, this is a 1-minute chart, so this is all going to be today, the 22nd of August. Even though it looks like a long period of time, each bar is 1 minute. Now the 200-day moving average on here, I have that on there just as a standard, but it's usually not something that you would pay a whole lot of attention to. You can see in this particular example it's bouncing off the 200-day moving average, but I'm not going to put a whole lot of confidence in that in a day trade system. You can test it yourself, see what you think. What I wanted to show you is how these markets move in several different ways. Now, first of all, I'm starting here at 9:30. That's the first major issue. If you build trading systems or try to use your trading strategies and include the nighttime sessions in the United States, and I'm talking about East Coast United States, you're going to have a lot of variability in your results in terms of how you backtest them. So I look basically between 9 o'clock and 3 o'clock in general to look at trading systems when you're looking for a good day trading strategy for Forex. And of course the same thing for S&P 500, E-minis, and so forth. So the daytime session on the East Coast of the United States is essentially what I recommend. All this is for entertainment purposes only. It's all my opinion, but that's what we're going to look at. So when you're doing that, you take a look at the 20 bar moving average. I called it day earlier, but let's call it the bar, 20 bar moving average versus a 5 bar moving average. And these are also, you'll notice here, set up on the closes. When you get a close above a 5 bar moving average, so a price close above a 5 bar moving average, that is usually a great buy or short signal. Now you should back test all of this. This is my opinion, but as you can see right here, we have a sloping 20 bar moving average, and we get a crossover right here at the 9:41 a.m. point. That close was 137, and let's call it 0.16. You would then buy at 137.16 if you could get it, and you can get it. The market traded a little lower, so you buy. Now, holding on this 1-minute bar system, there's just basically a lot of gut feel to it, but there's some simple things that you have to look for. You don't want to hold it if your 5 bar moving average crosses below your 20. So, and you really want it to look like this. You want your 5 bar to start to slope up. So a very simple entry system is a close above a 5 bar moving average, a price close, and then buy at that close on the next bar. So we'd see it here, and we'd look to buy it here. We'd see the close here, and we'd look to buy it here. We're above the 20-day, we're above the 5-day. That's a buy signal. Now, I haven't back tested this system I'm telling you about on the US dollar versus Japanese yen, but I've definitely back tested it on other ones, and I can assure you that's a good system. You should back test it yourself. You should only take everything I say as opinion. But if you're a tape reader, a seat of the pants type trader, that's a really good trade on a 1-minute bar. Again, we're talking about extremely liquid markets that are moving, and we're talking about between 9 o'clock and 3 o'clock during the day, Monday through Friday. Stay away from the weekends, stay away from the nights, in my opinion. So you could see if you put this trade on here, you'd be in at about 137, and you could have stayed without having to sweat it too hard all the way up here. So we're here at 137, what are we going to call that? 137 and 16, and you'd be all the way up here, call it 137. So you'd make about 16 pips on this trade, roughly, and without a whole lot of sweating. You never cross below the 20-day. Once you got here, it was smooth sailing on up because you're even above the 5-day, no choppiness. So that's basically how this works. You would close this trade out right here, and you do that all gut feel. Now, as you started to get choppiness, and especially as the 20-day started to go flat, you don't pay any attention to those signals. What you're looking for is a declining or a rising 20-day, a 20-bar moving average, and then you're looking for a close below or above the 5 moving average, depending on what's applicable. Here, in a little bull rally, you're looking for a close above the 5-bar moving average, and it's all above the 20 and the 20 sloping up. Now keep in mind, right here, it's a guess if the 20 is sloping up. So maybe you'd want to wait and enter that trade here. Same thing, it's above the 5, the 20 is clearly sloping up. You could see that close and get in right there at 137.17, and you'd still make almost 15-14 pips in very few minutes. What is that, 7 or 8 minutes we're talking about? So it's a great little trading strategy, great little Forex day trading strategy. Very simple, doesn't require any hard indicators to follow. You can just use that and use it over and over again. Let's take a look from the short side. We have a 5 bar moving average below the 20-day. We have a 20-day starting to break down, and we're looking for a solid close below the 20-day. We get one right here. That close is 137.27. We're trying to get in at that price right here, and we could just barely get into it. Maybe it's at 137.27. We don't know with slippage if we'd get it, but if we went short right there at 137.27, we could stay into it without any headaches really down here, and we could pick up maybe 10 pips. That wouldn't be a great trade, but you could get in and out really quick and not have to sweat it, as you can see. What we're trying to avoid is this sweating constant nonsense, and you can do that with this little 5/20 crossover system and using the previous bar's close as an entry for your current bar. Keep in mind, these are 1-minute bars, and you got to move quick. Let's take a look at this. We had a flat 20-day, so I don't like that. Let's go right here and go to this one. We start to see this is turning up. The 20-days turning, the 20 bars turning up. The 5 is clearly above the 20. We have a close that's clearly above the 5-bar moving average, and that close is 137.33. We get in at 137.33, so we're in at 0.33, and we can easily stay into that, let's say to here, not all the way up here, to here, and 33.46, so 137.46, and we can get out of 10 pips at least. If we have more stomach for it, we could stay in and pick up another 5 pips or whatever. I'm not saying it's realistic we're going to catch all this, but we can certainly pick up 10 to 15 pips without ever really sweating this trade, and we're doing it in less than 10-15 minutes. So that's another example of the bull side of a 5-bar crossing over a 20, and very simple. You don't need any computer indicators. You just need to be able to put moving averages on there. You'll notice we're pretty much ignoring this 200-bar moving average on a intraday chart. Let's look at it again. We have a flat 20-day 20-bar moving average. I don't like that. I'm going to wait till it starts to turn down. My green 5-bar is clearly below it, so I'm going to look for a close below it. I get that right there. You'll notice this is turned down, this is turned down, so I'm getting that right there. The close is 137.54. See if I could get in. I could get in on that. So let's assume I'm short right here at 137.54, and I'm going to ride that down to right here before I start to panic, and that would be 137.40. So I could get 10-11 pips out of that, no problem, without any serious backfilling, and I'd stay well below the 20-day, the 20-bar moving average the whole time. Again, I'm not talking about taking this one, the extreme. I'm talking about taking this one or this one and getting out. So in a very short period of time here, we've looked at 3 different trades where you'd have potential of 30 or more pips on 3 different trades. It's 10, 10, and 15, whatever we said it was, without a lot of headache, without a lot of sweating, and with very simple entry systems. The exit is obviously totally subjective, but you want to exit well when you see this spacing, price above the 20-day, you want to get out, because if you get too much spacing like this, that market's going to correct. So this kind of standard spacing is fine. The minute you see the spacing between the 20-bar and the bottom of the price expand like it did here, the gap gets too big, get out, because you're getting ready to get a pullback. It's a great little indicator that you can use with nothing other than your eyes. Same thing here. You see we opened up and we have a big gap between the 20 bar and the price. As soon as it starts to crush in on you, get out. That's a very easy little indicator to use for day trading. So that's Forex day trading strategy. Very simple, very easy to use. We also have algorithmically generated trading prices on here, and let me show you how they work. We're scooting down here at the bottom. RBM Research puts these out every morning before 7 a.m. Again, this is cash Forex, and this is for Monday the 22nd, which is today. I'm making this. We have algorithmically generated trading entry signals, and let's see what it is for the U.S. Dollar versus the Japanese yen today. We have 1 day, 2 day, 5 day, and 10, 20 day holds. If you wanted to day trade, you'd use the 1 day holding period, and it recommends a short here at 136.39. So let's go up and take a look at it. It's recommending short here. This would be a 1 day hold. Get in today, close out worst case end of session tomorrow at a loss, or take your profit sooner. So let's see what it looks like right now. 136.39. And let's go where we are. These are, I think this chart we're looking at is a little delayed, but let's see what's going on. Let's go here. This is a half-hour chart. 136.39. Doesn't look like we've hit it yet. 136. This is a daily chart. 136.39. No, we have not hit that yet today, so those prices would not have been hit. But you can use these intraday. You can use these daily chart, this 1 day hold for intraday trading. Sometimes you just have to keep an eye on them. Obviously, all these are for entertainment purposes only. Everything that you've heard me say is my opinion and for entertainment purposes only. You have to use everything with a grain of salt, if at all, and do your own back testing. But that's basically Forex day trading strategy, a very, very simple one. Again, keep in mind, you want high volume markets. You want to stay between 9 o'clock and 3 o'clock Eastern Standard Time. You want to stay away from nights and weekends. And this strategy, you should back test it yourself. Build a little computer program. It's very simple to do. And it also works on not only other currencies that are high volume, very active currencies, but it works really good on other contracts, especially high volume futures contracts. Let's go down here to the bottom and show you that arborumresearch.com is available for you every day, 7 days a week, but you can get updates Monday through Friday at 7 a.m. arbamresearch.com, absolutely no cost, no credit card required. There's a link in the description below. You just sign up and you can get access to everything I've been showing you on here in terms of the algorithmic prices. And we cover 190 stocks, the major Forex pairs as I just showed you, crypto, BTC, and the most liquid futures. If you like this video, please click the like button. If you want to subscribe, please do that. If you have any comments, please leave them in the comment section below to help us make these videos better. And keep in mind, everything is opinion. Everything is for entertainment purposes only, including all of our entry prices and all of the discussions about technical analysis with moving averages. You have to build your own systems and back test them if you want to have the stomach to trade, and you definitely trade at your own risk.